Alright guys, welcome to Crest, where we focus on fundamentals to make our decisions and then technicals for timing. Alright, one more thing before we start, I want you guys to like, subscribe, share, comment on this. You can also give me suggestions on what next to focus on regarding fundamentals and macroeconomic releases. So today the main focus we would be on is decoding economic releases. What a lot of people do is they go to forex factory or trading economics and they just go and look for the data. Okay, so we have this guy is the job opening because it's high impact data. Oh, this is it is worse than I expected. Oh, so the dollar is actually bad. No, it doesn't work that way. So this is June or 4th June. So if that is bad, so it means the DIX is supposed to drop, right? 4th of June. This is on the 4th of June. Just take a look at this. The market is even climbing. So you see this? It's climbing. You've got to understand the particular data you're supposed to look at and the end result for that data. And so we focus on DXC. So there are other data that could be worked on, but for now, I just want you to understand basic stuff. On NFP data that we had here, so where is that data? Okay, so beautiful. So the on June 6th we had the euro. They cut the interest rate by 25 basis points. Now, cutting the interest rate by 25 basis points, it shows that the euro is weak, right? So it means the dollar is supposed to be strong. It's just simple understanding because I think the euro is about 50 or 60% of the Dixie. And on the 6th, on the 7th, we had this unemployment rate at negative. So a lot of people will be like, oh, so this data is bad for the dollar, and then NFP is actually good. They would be like, they're confused now because both data are actually saying two different things. One is worse, the other one is better than expected. If you already knew the context, because everything in the market is context, both technically and fundamentally, if everything in the world actually is context, you've got to understand, okay, this scenario is this, what are we expecting? If this is that, what are we looking out for? Okay, because everything is not just black and white. It's not just black and white. Even on the chart, technically, it's not black and white. You have a mechanical system, you have a bot. Yes, bots are probably black and white, but yet still, it's not exactly black and white to me. This average. So now, what you have to understand is this data is actually not bad for the dollar. Remember, the euro cut the interest rate. So if they cut the interest rate, then we have this for the dollar. We are looking at dollar strength. That's when you go to your chart and look at how long it's going to be. So if we say this is our higher high, higher low, we have our higher high. This is a potential higher low. So the potential of the dollar going to equal highs is there. But now there was a terrible data that came out here and made price come down. All those things you have to put them into consideration and have to understand those basic stuff. So okay, let me just give you a clue. The first one is the CPI data came out worse than expected. Remember, the dollar is strong, but this CPI data coming out on the 12th of June is telling us, okay, so we could be looking at weakness in the dollar. They had the FOMC statements and the funds rate. So there was this, I think, I can't remember exactly what happened, but it was a dovish tone kind of on the 12th. If you go to this chart on the 12th, you would see this. I think it was a bullish tone. I can't remember exactly that some time ago, and I'm doing some strength. But the CPI brought price down for Crest to continue. Now, technically, there is already a break of structure. you go to your fundamentals again. Now you are not just looking at calendars. You have to understand some kind of things. You have to read some news. You have to understand, okay, what are we looking out for, what are we not looking out for. So these PMIs are also very important set of data, but you've got to understand which one is very, very solid. Coming down, let's just look for one more data. So we have this final GDP for the USD. It came out as expected, but what's the previous data like? You look at this durable goods, it's not that good. Now the pending home sales is also a good data, but it's not just one of those things we focus attention on. But the most important thing now, one of the most important data is the PCE, which is the Fed's preferred measurements of inflation. Just take a look at this. It came out as 0.1. Now it as expected. Why is the dollar not strong? Because remember, the CPI came out bad. That's one, but the dollar is still strong. Because Euro had cut their interest rate. It affects the dollar directly. Then we have this data. It moved from 0.4, 0.3, 0.2, now at 0.1. Even if it's as expected, it is dropping. So inflation is dropping. It means cutting the interest rate will now be on the table. This is 28th of June. 28th of June, where is it? So this is it. We just understand this is a ceiling for us. We don't expect the dollar to go above this. This is some terrible data. It's now left for you to understand what is my technical criteria to enter this. It is very simple. I have my criteria. So if you need that, I have a lesson for that. You can contact me directly. I would fix in my email right there. So this is the basic things you have to understand, and right from there on, I think the USD had terrible data. So the CPI for the euro came out positive, which gave some positive, not too positive, but it gave some vibe. And Fed Powell spoke. I can't recall exactly what he said. Okay, so let's look at this. The inflation is cooling again. So if it's cooling, Dixie, we are looking at some weakness on the Dixie. So let's just take a look at the the non-farm payroll. It came out better than expected, but take a look at this unemployment and take a look at the average hourly earnings. What is the average hourly earnings like? Its previous was 0.4 and now this one is 0.3. So it's coming down. Inflation is coming down. Unemployment is rising. So it was 3.7 all the way to 4.1 now. So this is a problem. This is some form of weakness. Then in non-farm payroll, it's the number of people that are employed during the last month, which, if you look at this data, is actually coming down because the previous one, 350 something all the way to 200. This is weakness in the USD. You have to understand the previous data. So July 5th, you see is weak. Let's take a look at July 5th. This is it. This is the supply. All of a sudden, all this demand is not holding, and price has been sinking and been sinking. If you go look at your chart, I'm just giving you guys full expo. So this is weakness on the USD, and all of a sudden we had this beautiful push to the upside, which we've been buying all the while. Why? Because there was beautiful data. If you look at my previous videos on outlooks, on the market outlook for the weeks, you would understand why we've been looking at the Dixie longs. So let me just give you last month. Where is it? Yes, last week of last month, I think we had some good data. Okay, so remember, so they cut their interest rate September 18th. So yes, Dixie has been weak, and something happened. Where is that guy? Okay, Okay, where is it? Fred Powell, yes, he gave a speech. I can't recall exactly what he said, but he said something about the Dixie doing better than they actually thought it would. That was one of the good data that came up. And then he spoke again on September 30th, sorry. So let's just take a look at what he said. He said, alright, says more interest rate cuts are ahead, but the Fed is not in a hurry. That is a bullish tone. It's somehow like a neutral tone, because the first one is telling you, okay, more cuts are coming, but the next one is telling you Feds are not in a hurry. So indirectly, if it was a bearish tone, a bearish market, somehow they're looking for the markets to push to the upside. So just taking a little shot here, Powell signaled that lower rates could help guarantee a so-called soft landing, but some risks remain. So he says, looking forward, if the economy evolves broadly as expected, policy will move over time a more neutral stance. He explicitly said they're looking at a neutral stance, so they are not that dovish anymore. But the market will give us the wish, they are not in a hurry. So this is a basic understanding. This was on the 30th of September, but we already remember I already spoke on the 28th. So look at this. 28th is this. Yeah. Then we have stated. Sorry. But this stated very bullish tone. So if I have my specific entry criteria. So dollar has been bullish and bullish and bullish. There is no need for you to be looking for dollar shorts. The NFP data came out very positive. Let's take a look at that for this month, right? Yeah, this month. Where is that? On Friday. NFP data came out. What's going on? Okay, came out beautiful. Just take a look at this at 4.1. They're looking to cut interest rate, but all of a sudden we had a beautiful dropping from 4.3 to 4.1%. Dixie strength. Look at the NFP data, all the way from 114, 142 to 454. Beautiful data. And average hourly earnings is all the way from 0.2, now it's at 0.4. You just can't ignore these very crucial things. So Dixie is bullish. Why wouldn't I be longing Dixie all the way up? That's just it. So I don't want to go into other data, but what I can say is, if you look at previous data, outlook, you realize that I'm really focused on Aussie strength, because they are the last to cut interest rates, which I'm already shorting the Euro AUD and Euro USD also, because USD is stronger. I've been shorting this guy. And another thing is, a lot of people will be looking, this is me calling the trade, a lot of people will be looking to be buying here because it's some form of demand or some sort of support and resistance area. So they'll be looking at this, beautiful support and resistance, they'll be looking to be buying, targeting what this highs or wherever. It's a wrong thing, because you understanding the technicals now, the fundamentals, you understand the volatility coming in. So the volatility is going to take this guy out. So this guy is a liquidity for me. Okay, it's a liquidity. It's not a point we should be looking to buy. It's just very plain and straightforward. You could just understand this. So the same thing goes for Aussie Swiss. I've been looking to long Aussie Swiss for quite some time, so this is it. But the Swiss is already a strong pair, but they've been cutting interest rates. The Swiss franc is strong, so which is giving their exporters issues to be able to export. So they are complaining and telling the central bank to devalue the Swiss. So if they are devaluing the Swiss, it means they have to put in some some things. So indirectly, Swiss is weak and also strong. So that's a neutral stance. But the card is weaker. And if that's the case, you focus your strength on Aussie card longs, which if you watch previous outlook, you understand where I'm the points I told you I'm looking for longs here. And also the Euro AD is one of those guys I said something about. You could just easily look at this. This is the first trade. I have the second trade, and now I'm in this third trade. I'm still looking for this price to take out these points. A lot of people would have been looking at, oh, this guy is supposed to go to the upside. This was a break of structure here. This was a break of structure, higher high. So we're looking for this to be a kind of higher low to make what a higher high. No, I don't look at the market that way. It's you avoid a lot of losses if you focus on fundamentals. I know a lot of you will still be not actually accepted, but regardless, you can just take a look at the previous outlooks and well, it's alright. Let's end there for today, and please like, share, subscribe, comment, and if you have any suggestion, please comment. I'll drop my mail address, so you could actually contact me with if you have any issue.